Hello winners, welcome to this tutorial for support and resistance, a video in the series how to become a better forex trader. In this video we're going to learn how I trade support and resistance. If you're interested, please join along. My name is MINDBLOWING. I am a forex trader and an economist. I am also a mentor. I mentor people, try to help them become a better trader. Okay? So trading forex is risky, not appropriate for everyone. Past performance is not indicative of future results. Whatever money you have invested into the forex market can be lost anytime soon. So you have to be clear of the risk, you have to be aware of the opportunities, and you also have to be aware that this webinar does not contain any investment advice and should not be used to do so. So, support and resistance. Rule number 1. Has to be a swing high or swing low. What is a swing high? When price has gone, when price has gone, when price has gone from low to top, this now becomes the swing high. And in the other end, you can also say that when price is going lower, 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 this is now formed a swing low. Okay? There has to be rejections. Price has been rejected here. I would say that's a very good rejection. Price has rejected here. That's a very good rejection. It has rejected here. It has rejected here. So we need multiple rejections. The level has to be obvious. Well, this is an obvious level that price stopped at. Okay? And then if you look left, it has stopped here, it has stopped here, it has stopped here, and it has broken up here, but still it has been working very fine, very well. And the move away has to be significant, as I was talking about here, 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 all good, very good. It also has to be recent. That means we're not talking about the last year, we're talking maybe the last 3 months. If you go to daily, now we are not looking at 4 hours, and we're looking back to August, so that would say a half a year. Okay, that's okay. Then you also see that, I didn't put anything here. Well, we can put 1 here, because price has rejected it here, it had rejected it here, it has rejected it here, it has rejected here and here. Also here. The move up has been significant, has been significant, has been significant, has been significant, and has been significant. It is also recent, within the last 6 months, and it's also a swing low and a swing high. Now, if we take that to any chart, we should be able to put support and resistance. Very clearly, I must tell you, people. In between here, there's a lot of noise, there's a lot of noise, there's a lot of noise. In these areas, you are not supposed to be trading, okay? You're supposed to wait and wait and wait and wait and wait. For pound USD, for example. Let's go there. Say that maybe. Swing high, swing low. Any chart. Swing high, swing low. Has it been rejected before? This must be a better price, I guess. So, swing high, swing low, swing high, swing low. In between here, and this doesn't look to be a good one in the past, then we should say, is this a better area then? Here? Yeah, this might have been a better area. And as you can see, you might want to change it up to here and say that's a better space. Okay, as you can see now, I only have 3 lines. But I don't want to use lines, I want to use areas, okay? So this is an area of interest. This is an area of support and resistance. When support comes lower, no, when price comes lower, it becomes support. When price goes higher, it becomes resistance and it's rejected. So let's go through the rules again. Swing high, swing low, level has to be obvious. It's also moved significant from the area. Moved significant from the area. It has to be support and resistance. It's both resistance, resistance, support, 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 support. And recently rejected. This is very recent. This is very recent. Okay, let's go to the next one. New Zealand dollar. I'm just doing any charts that comes to mind. I've never done this before at this very moment. So, high, swing, let's just see, swing low, and then in between here, that's also one. Okay, and then we could just take a bit lower. That's how you can do your support and resistance easily, effectively, straight to the point, no fuzz, nothing else. If you can do this, every single one of you. So what is our regular views now? We have 295 subscribers at the very moment. So if I get 295 charts that I want to look through, maybe 5 each, I would be happily to help you do your charts and help you become better at your support and resistance. Now there's two other things I want to talk about. One is, what do we do about the future? How do we look into the future? Well, I don't know about the future, but what I can tell you is that if price came down to this area here, I would be very interested. But the move away from this area was not significant. And also, on the smaller time frame, which I don't want you to use when you're analyzing, is when you go in a downtrend, you look for the low. That's where you expect it to come back up. Go to the low, that's where you expect it to come back up. Low, this is where you expect it to come back up when it breaks here and it goes a bit higher. That's what I do every single time. And each time it kind of broke up and went back to this other one. Okay. And here it just went. There's no opportunities here. And also for the uptrend, you'll want to look at previous high. Let's see if I can find it for you. Previous high. This is high. This is high. So price broke up, entry. Price came down again, entry. Price broke above, entry. And price never came back again. When price now comes back to the area of where it was previously used as support in a trend, and price goes lower, this is lower than this price, that's when trend is now broken. Now this is where you want to exit your trade. So for the future, we want to look at previously what has happened. That's me doing that again. Want to look at what has happened earlier, and we also want to look at, this is not prices, this is areas of interest, and every time it came up to this price here, we have some kind of consolidation. Okay, and other times it just goes down to price and respects it. Another very important information is, I could have done that as well with you, maybe we should do that as well. When price comes to an area where there is 3 zeros, 67 flat, 66 flat, it's not straight forward, 66 flat, 64 flat. So if I just go out now, you would see that we put in 67, that's been used. 66, it's okay, it's not significant rejections around this area, but as you can see of 65, it came up to this area. That's kind of more the method you can use in between when you have a trend. But now you want to look at the swing highs and swing lows until, yeah, and then for now, where will this stop? I don't know, but you will just wait for reversals or price rejections at area of interest. So for next time, maybe this is the price of 63.30 if it breaks below 64. So right now 64 is the next one, and if it breaks below 64, then we have another drop down to 63. Okay, and now when price starts moving up again, now you look at the same levels, but it's just on the way up, on the way up, on the way up, on the way up. Where do you now take profit? I would say there's many different ways to do that. At resistance is very important, and you can also trail your entries. You can also use indicators such as pivot points to know when to exit a trade. Pivot points is just future support and resistance. Okay, I think that's more than enough for you now. Please go give me your charts, DM me on my Facebook page or my Telegram or my Instagram, whatever you find me, I'm Bilal, FX Trader, something like that. You would find me, DM me, and I will be happy to help you. Okay? Until next time, don't risk money you cannot afford to lose.